Welcome to Conversations, Season 2 of the MTA Podcast Series, a weekly audiocast featuring interviews with leading investment strategists, geopolitical experts, and other key thought leaders, brought to you by the Market Technicians Association.
Tuesday, March 27th, 2012. This is Conversations, the official MTA podcast series. And today's guest is Michael Reisner. Michael Reisner is head of equities technical analysis at UBS Investment Bank and is based in Zurich, Switzerland. Michael services global investment banking clients of UBS. His team gives service to global prop trading as well as to the wealth management and asset management divisions of UBS. Before he joined UBS in 2003, he spent 5 years as head of technical analysis at DZ Bank in Frankfurt. Michael has a degree in economics, and he is in charge of the advanced education program of the German Association of Technical Analysis, which is a wing of the International Federation of Technical Analysis, or IFTA. Michael is the top-rated technical analyst in the 2011 and 2010 Xtell Pan-European Survey. Michael, welcome to the program.
Thank you, Ed. Thank you for having me here.
Well, you're welcome, and thank you for taking the time to join us. It's early on the West Coast. It's late in Switzerland, and here we are. But before we get started, I know a lot of our American listeners are going to be wondering exactly what is Xtell. I know that's important to you and your team. Can you give us a little background on that?
Yeah, I mean that's very simple. I mean, in our industry, investment banking industry or broker industry, I mean obviously you get paid by orders, but another point how we get paid is also by recognition. By the recognition of our clients, and that's something which is done by surveys. I mean, it is very important, particularly internally, for measuring performance of analysts, so not just technicians, obviously. That's also very important for fundamental analysts to get voted by the clients, and that's an objective measure, how you can differentiate also, towards your rivals.
Okay. All right. Well, we usually get these podcasts started with a little personal background. Michael, I think most people would be interested to know a little bit more about you before we talk about the professional. Can you tell us where you're from, where you went to school, what did you do before technical analysis, and how'd you make the transition to whatever your first position was as a TA?
Yes, I mean, I'm working in Switzerland, but I'm actually German. So I grew up in South Germany, so more or less just around the corner here of Zurich, in Stuttgart. And I was born in Berlin, so there was obviously a move from Berlin down to the south of Germany, and made my elementary school in the southern part of Germany, and just went my way through. And I think my first contact was basically the markets was very simple. I inherited some money from my grandma, and that was my start into the markets very early.
How old were you when that happened?
That was actually I should have been around 15 or so, at the age of 15.
All right.
And that was my starting point, right at the beginning of this last structural bull market, so in the early mid 1980s, and I mean, I think as usually as you start into the markets, you read a lot of stuff, and from media and also from banks, and I got right into this 1987 crash. And I wondered, there's something wrong with that. What I wrote from all these banks and so forth, and that was actually my first step where I've been looking for alternatives. So that was my first contact to technical analysis, and I just got went further into details and into the theme, and that was my background, how I started or how I came into this theme. And I think the rest is just the logic, which means I went into economics and studied economics, and started my career at a bank. First at Warburg in Luxembourg. That was my first position as a trainee in asset management and trading, and then furthermore advanced into the technical theme and into the community, which is, unfortunately not that easy. It wasn't easy, and also even today, I think it's not that easy. I mean, on the one hand, I think the whole industry, the technical industry, has developed a lot in terms of professionalism and also in terms of vacancies, I think so. But nonetheless, I think it's still only a niche, and to be honest, I think it will be also a niche in the future. But obviously, we have a few more technicians today than 20 years ago, so that's of course a help. But nonetheless, I mean, if you look around in the industry, in the major investment banks or banks, I think you have probably just small teams of 2-3 people, and that's it. So not that easy to get into a professional environment, at least in the industry. I mean, you can do this obviously on a private basis. That's it.
Mm-hmm, mm-hmm. What was your first position as a technical analyst?
Yeah, man, that was quite shortly after my first position, where I was a trainee. I had another year in a regional bank in South Germany, where I had my first position as a kind of mixed analyst, so half technical, half fundamental. And then I think it's the classic game of being at the right at the right time at the right position. So a bit luck, and I went into Frankfurt to the former DG Bank, which was still is the head institute of the whole cooperative sector in Germany, where I built up the technical team and integrated it into the fundamental research there. So that was my first position.
Okay.
And I stayed there for 6 years, and then the call came from UBS.
Just out of the blue, huh?
Yeah, I mean, to be honest, that's an interesting story, because I mean, the UBS came actually in 2002, 2003 back to me and asked me whether I could build up technical analysis here, because I mean, formerly, particularly in Europe, there was no technical analysis franchise here at UBS, but obviously with the experience of the first bear market, 2000, 2002, there was obviously demand growing on the client basis, and I quite honestly, I remember all the reaction in Germany from my colleagues who asked me and who told me, are you crazy, going from a safe German bank into this sharky environment of an investment banking area? I mean, you get fired within 12 months. I said, look, I mean, we have just entered a structural bear market, and I think this will continue for another at least 10 to 15 years. And that was my calculation. I mean, in a challenging time, if you just go sideways, even within strong trends, but just sideways on a longer-term picture, I think, and still think, that's the best environment for timing and for technicians. So demand has been growing all the time, and I mean, probably traders can complain about lack of volume, but we as a technician here cannot complain about too less work. So that was okay.
Yeah. It seems like, at least here in the U.S., the investment banks have spent the last decade laying off their technical analysts and teams. Are things different in Europe in general, or is your situation at UBS somewhat unique?
Yeah, I mean, I would say it's mixed. I mean, on the one hand, the banks and the industry understands the need of their clients, particularly in this encouraging environment, because, I mean, we do not have strong trends anymore, and to be honest, that over the next 2-3 years, I don't think that this will change dramatically, which means, that's my view, I think volatility will even continue to contract, which means, again, you definitely need to offer your clients a timing product. But I mean, we all know how it is. I mean, you know, when you have pressure on the industry, and I think that's one part of the last 2-4 years. I mean, the business models in the banking industry has just blown up, which means cost pressure, need for cutting costs and all this kind of stuff, which means that, I mean, the technical analysis teams in the banks, I think there's always a bit of a weak position. You know, you need the right lobby behind you, then I think you're safe. But if you don't have this, you always have a problem, because that's still the case, as it is, by the way, also for fundamental research. I mean, you're not trading, so you have not a clear revenue string of P&L behind your work, and that makes it always difficult to have a strong position. Mm-hmm. I mean, that's generally the position you have in research. So at the end of the day, I think you definitely need the commitment from the management and the clear view that this is good for the clients, and then I think you're safe. And to my understanding, that's still the case. Probably in other companies or other banks, that's not the case. I mean,
mm-hmm. Mm-hmm. All right. Well, so now you're at UBS, and why don't you take us through a couple minutes of what does your typical day look like? What does your position entail there at UBS?
Yeah, I mean, I think that's something that can apply to all technicians. I mean, usually start very early because, I mean, the first product you're sending out is a daily call for the traders internally and also for clients externally. And that's something which we have to send out before the opening bell here in Europe, which is 9 o'clock Central European Time, which means we have an early start, which is at around between 6 and 7, just covering all the markets, Asia, overnight action in the futures. And, I mean, usually we go through all the sectors and probably even single stocks. But I mean, that's our approach. We have a top-down approach, at least to the sector basis. If there's more demand than single stocks, and we put everything together in a piece. That's our daily comment, and we send that out at around 9 o'clock. And then we have a little bit of a briefer, and then the crowd comes in. And again, internally, we have our internal distribution lines, chat systems, etc. And the same applies also to our clients. I mean, we have a lot of requests from our client base about everything, markets, single stock requests, what to have, what not to have, and so forth. And our day usually ends at around 6 o'clock European time. So I think it's a long day we have.
Mm-hmm. Mm-hmm. All right. Well, we've reached the point in our program where we like to talk about the technician's toolbox. That is, what types of tools do you use for your analysis? I know you've got some tools that are unique to you. Your flagship product, the Technical Weekly. I'd like to hear a little more about that. But maybe you can start off with sharing with us some of the tools that you use that most technicians would be acquainted with, and why you don't like those, and then maybe venture off into some explanation as much as you can about your Technical Weekly indicator.
Yes, I mean, basically, I would say that we're following a broad set of technical tools, including old school techniques like, I mean, Dow theory, pattern analysis. So, I mean, Dow theory, I think it's an absolutely fundamental thing in technical analysis to understand or how you can read a chart, which means high highs, high lows, so to identify support levels, distribution, accumulation areas. And if you're not able to read and make a chart, whether it is bullish, bearish, or just neutral, I think it will be very difficult, to really understand the markets. I mean, obviously, or furthermore, we're looking at a lot of technical indicators, standard indicators, which I think are very, very well known in the industry, which means trend following, MACDs, RSI, and so forth, and also, indicators which are identifying the strength of a trend. Then we look a lot at structural technical indicators like McClellan Trend Index, Breadth, sentiment. I think that's very important. So to identify sentiment in the market, and not just via these classic survey indicators. I mean, obviously there is very often a difference between talking and positioning, of talking sentiment and positioning. So flow indicators is also important for us. And I think, very important, or one very important tool, which I think makes also our product and our franchise a little bit unique, is cycle analysis. I mean, I was always surprised about technicians, or why so few technicians are using cycle analysis, because that's the very simple connection between these two dimensions we have in the chart, price and time. So I mean, we have dozens of tools to get an idea about where we could go and time projection, target projections and so forth. But I think I should have also an answer on the question. Okay, you are bullish. You have a target. So when do you expect this target to meet? So time cycle analysis, that's very important for me, and that's something where we have a lot of work behind. So we have an integrated cycle analysis model, which includes static cycles, Fibonacci cycles, Gantt cycles, and so forth.
Mm-hmm. I've noticed in your reports you also make mention of Elliott Wave quite often, but I always have to wonder when I read the reports, how much weight do you actually put on Elliott Wave? I can't tell if it's really an important part of your analysis or if it's just a confirmation of everything else you do.
Yeah, that's a very good question. I mean, Elliott Wave, I think, is a very I think it's a very difficult discussion. I mean, to my understanding, Elliott Wave is to a certain standpoint subjective, which means, don't get me wrong, I mean, you can be very, very precise in Elliott Wave analysis, but then I think you have to make it by 100%, and then it is objective. My problem is, as a technical analyst, I would say 90% of my client base simply not understanding Elliott Wave, which makes it very difficult to use it in our product. So we use it actually more as a kind of backup, which means when we think we have relatively clear patterns from a wave perspective, then we use it and we highlight it to our clients, and otherwise we leave it because of the partly subjective factor, or as I mentioned, that our clients simply do not understand it.
Mm-hmm. Mm-hmm. Michael, I think you would be a great person for this next question. Let's talk about communicating your research to the consumers of your research. What special problems do you typically deal with? For example, you just gave the example of 90% of your customers probably don't understand Elliott Wave. What other things do you have to try to keep in mind when you're writing your research so that the people who are consuming it actually find it something of value?
Yes. I think, first of all, there's a big difference between the technical analyst of a global investment bank when you use or when you provide your service to pension fund managers, for example, so conservative pension fund managers, so where we actually have to serve the whole range of money managers. And what we do is we try to connect everything. We have a strong approach across asset class on intermarket analysis, which, to my understanding, is something that the clients really understand. So the intermarket relationship between currencies, between risk on, risk off, and if you connect that with the classic technical tools, then I think clients understand it. However, and that's still the problem, I think that there's in the industry that there's a very inhomogeneous level of understanding technical analysis. And as a technician, I think we always have to think about that, which means on the one hand, we have to keep it relatively simple, so not being too complex. On the other hand, I mean, we have a lot of traders and investors in the market which are very sophisticated, and this is obviously also our client base where we can't keep it too simplistic. So it's always a bit, a balanced thing where you have to find your way. Mm-hmm. But to be to going too much into detail, to be too specific about, for example, Elliott Wave, or which I think has come quite a fashion, which is Tom the Market Indicators, for example. Mm-hmm. It is a very useful tool. I like it. We have also a specialist here at UBS with Jason Pearl, but the point is, I think, exactly the same as with Elliott Wave. I mean, it's just a relatively small client base which really understands it, which, to my understanding, is more in the hedge fund industry. And the broader you go out in the industry, in the investment society, it gets difficult.
Yeah. Michael, we're coming down to our last minute here, and I still got a handful of questions. I guess I'm going to have to do some triage here. Very quickly, tell us, who would you say have been your greatest influences in technical analysis? Maybe you've got some favorite books you could share with us.
It's definitely John Murphy. Absolutely. I mean, he's one of the great pioneers in technical analysis, and I mean, from himself via the IFTA conferences, the yearly conferences, and also the books and so forth. I really learned a lot to have the commitment to have a clear and clean approach and technical analysis, systematic approach, and so that's definitely my person. I've learned a lot.
All right, and then finally, boy, we are out of time, so just in 15 seconds or less, have you got any thoughts you'd like to share with us on your thoughts on for the markets in the days and weeks ahead?
Structurally, long term, we are still a bear, which means we think the structural bear market will continue for at least another 2-3 years in equities. And unfortunately, also for the rest of the year, we are a little bit more cautious, which means also from a seasonal aspect, the next 3 to 4 weeks, we expect a top building process, which means that the second half 2012 should be much more challenging than the first 3 months.
Okay. And that wraps up this week's MTA podcast from SeattleTechnicalAdvisors.com. I'm Ed Carlson, together with our recording engineer, Shane Squark in New York City. Say goodbye, Shane.
So long, everybody.
All right. Thank you, Michael. Let's keep our stops tight. Good day.
Thank you. Thanks. Bye-bye.